Hey everybody, welcome to Futures and Charts. Today, which is Tuesday, the 11th of February, and it's about 10 to 10 right now. And the crude oil market is up about 72 cents. Diesel is up about 4.5 cents. And there's some headline news that is talking about crude oil prices going up because of Russian output has declined. And I believe I heard also that the Ukrainians had hit some Russian refinery or oil production or something with a drone. I'm pretty sure it was refinery. So anyway, that kind of stuff is still going on. And I think it's just important to remember that, when Trump got elected, there was a thought that oil was going to go to 50. Well, it obviously is not going to go to 50 immediately. So, and if the herd is thinking one way, you should probably always go the other way. Um, so we're at $73 now, and I'll go have a look at the charts with you, and we'll see what they're telling us. What I thought the last week is sort of playing out. So let's go have a look at it. All right, so you can see here the crude oil is up around 71 cents now, and diesel's up 4.71. And let's have a look at the crude oil chart. I've drawn some trend lines that it was in here, and it has broken out of that trend line. And when you look at the overall scheme of it here, we'll switch out to a 9-month. You can see the cup formed here, and this is a pretty steep handle, but it is coming out, breaking out of that. And there's a pretty fair chance that we're going to be up to $75 relatively quickly. So, and we may be going higher too. Who knows? It's when you look at what the futures are expecting, they are expecting higher prices because the spot price is about still roughly 30 cents below, 25 to 30 cents below what the futures price is. So I think, and there's a pretty good hefty amount of basis built into. So I think the futures market is expecting higher prices. So whether that happens or not, but at least if you're watching this and you're thinking about what you want to do for purchasing contracts for the coming year, it might seem like the futures prices are high and higher than you would want them to be, but it could be that this might actually be a good time to at least lock in some of your needs. I wouldn't maybe go all in, but it wouldn't hurt to get a load locked in for later on. So that's what I think about that anyway. Sorry about my frog in my throat, but let's have a quick look at the wheat market here. The wheat market, it did actually kind of break through this little channel it was in, but it's climbed back into it now because we're up about 5 cents today. So that's a good thing. If it gets back in that channel, it might just keep chugging upwards. So let's just switch over to the feeder cattle. I did have those trend lines drawn in here the other day. Let's just put one in right now. And you can see that this thing has broken down from its high and it broke through that trend. And it tried to jump up a little bit. It must have been on Friday. And it's back down again now. So it's definitely showing some weakness. You might want to make sure you consider that. As high as it's gone, it could come down quite a bit just to get to the 50% retracement level, which I don't know if that's, depending on the fundamentals, I'm not sure what we're looking at as far as, I'm just going to try to draw the Fibonacci in here. And a 50% retracement would put us back around 250. So that's about a 15-cent drop from there. So Just something to consider. That's a lot of times what markets will do after they've had a big run up. So, and they may even go lower. So, but if the fundamentals are strong, it might just be a correction. So, you might be aware of that. So, let's look one more time at let's have a look at the diesel market. As I mentioned on Friday, the diesel market was acting a little bit stronger than the crude oil. It didn't drop down as far, and it's actually making a pretty good run up, as you can see. So that's what I was talking about earlier, about there's some underlying fundamental strength in some of these products, and just because of what's going on in the world, I guess. So as you can see, the diesel prices are actually getting a little bit stronger as we're talking, and there's the headline there: crude pushes higher as Russian crude output falls. So, and then futures test key resistance amid bullish momentum, and that was just an hour ago when that news article came out. So, something you might want to consider going forward, looking at what your needs might be later in the year. We're still probably, last year prices around here for the customer a lot of times were above $3 in the beginning for spring. I think we can be below that right now, so it still would be maybe better than last spring. So depending on when you were able to get it last year. So yeah, so look back and see what you got your contracts for last year, and give me a call at 406-450-1282, and we can see what they are today and see if you're comfortable with where they are, so you can maybe lock at least some in. So, all right, that's what I got for you. Thanks for watching Futures and Charts with Steve Nelson, and we'll catch you later.